Tyre companies have posted a mixed set of numbers in the second quarter of FY19. Strong volume growth aided the companies to post healthy top-line growth, but the raw material prices continue to mount pressure on profitability. Let's do a three-point analysis on how have some of the noticeable companies performed and what's the outlook on them. 1. How have SEAT, Apollo Tyres and MRF performed in Q2? Well, SEAT has posted a year-on-year growth of 15% in its net revenue, aided by volume growth of over 12%. In terms of operating profitability, EBITDA has witnessed a decline of 8.8% year-on-year on the back of significant rise in operating expenses and employee cost. Now, MRF has posted subdued growth in its net revenue, which grew about 9.5% on a year-on-year basis. Growth was much lower than its peers, indicating the loss of market share due to under-penetration in truck, bus, radial tires and increased competition in two-wheeler segment as well. Now, EBITDA margin witnessed a contraction of 2% on the back of significant rise in operating expense. Apollo Tyres witnessed a strong year-on-year growth of 22.5% in its net sales. In terms of segment-wise volume growth within India, truck volumes grew 35%, passenger vehicles grew 17%, farm tire 17% and two-wheeler volumes grew about 16% year-on-year. Believe that the EBITDA margin should improve due to strong volume growth coupled with 3% price hike in November. Now, the management has also maintained its guidance on capital expenditure at 6,500 crore rupees over the next 3 years. 2. What are the big challenges for tire makers going ahead? Well, tire companies are operating under fragile industry dynamics with increase in commodity prices and falling rupee, leading to increase in raw material prices and thereby mounting pressure on the operating profitability. Additionally, concerns over the demand from original equipment manufacturers and margin pressure have kept the sentiment subdued for tire companies. Macroeconomic factors such as rising interest rate, fuel prices and compulsory long-term insurance have actually dampened the demand of passenger vehicles and two-wheeler segments. Now, we believe that the market conditions are expected to be sluggish in the near term, but long-term outlook for all segments continue to be positive on the back of good economic growth, rising income levels and also lower penetration. 3. What should be investors' strategy now on the tire stocks? Well, stock prices of tire companies have come down significantly from their 52-week high levels. MRF is the leader in this space and deserves premium valuations on the back of its formidable record. Now, advise investors to accumulate the stock on any short-term weakness. After the recent correction in SEAT, the valuations are at reasonable levels and the plan for capacity expansion is expected to bring in more growth. Similarly, Apollo Tyres is also trading at reasonable valuation. Advise long-term investors to accumulate these stocks on any weakness.